As today's special bonus episode of Playing Above the Line is being recorded and released in real time, the world is facing some unprecedented challenges as it relates to the spread of COVID-19, which is also known as coronavirus. Welcome to Playing Above the Line, where we interview entrepreneurs, business owners, and community activists to get their thoughts and perspectives on leadership. Playing Above the Line is sponsored by Avizo Group, a business consulting and accounting firm focused on preparing clients for the future through innovation and positive growth. Welcome to another COVID-19 edition of Playing Above the Line. I'm Alan, your host, and I am longing for the day that I don't have to say those words. Special COVID-19 edition of Playing Above the Line. We've hit the pause button on our normal format for the last few episodes to concentrate on some of the issues that are facing businesses and individuals in the country, really in general, as it pertains to this COVID-19 crisis that we're facing. And we are actually on location today in the Avizo Group's Foley conference room, and producer Carrie has got us set up with some very nice social distancing, so we're about as far away from each other as we can get and be in the same room still. My guest today is Tammy Busby, and she is one of our own at Avizo Group. She is a strategic advisor for our firm. And Tammy, thanks for joining us.
Thank you for having me.
Well, I wanted to have you on specifically because you have been kind of on the front lines as we are dealing or have been dealing with one of the provisions that has gotten a lot of press lately, of the stimulus package, which was passed a couple of weeks ago by Congress, and that's the Paycheck Protection Program. And that is a program that Dennis and I talked a little bit about as far as the details, but as far as the mechanics and nuts and bolts, you have been intimately involved the last couple of weeks in applying for those things for our clients, or helping them apply and kind of consulting with them through that process. And so I wanted to kind of get your perspective on what's going on. So as it is today, April 20th, 2020, it's a Monday. What's the status of the Paycheck Protection Program right now?
As of right now, the $349 billion that was allocated on March the 27th has been used up completely.
Right.
So the banks are not accepting any more applications. The SBA is not accepting any more applications. And Congress is trying to get approved another $300 billion to go into the program.
Okay. So basically it took, two weeks or so to use the first $349 billion. What do we think the likelihood that an additional $300 billion is going to be passed? I mean, is that pretty much a given, or do we?
It's not a given. I think that right now what we're looking at is neither side wants to say that they don't want it passed. Mm-hmm. There's a couple of congressmen or women that are debating the fact that funds are being misallocated or are being misspent, and therefore they're not keen on putting more money into the program.
Yeah.
However, the last I read, which was this morning, they're looking at vote by proxy instead of having to have a unanimous vote with everybody not being in Washington. Mm-hmm. And if they do that, then I think it'll pass.
Okay.
I think it's a really good possibility that they're going to get more funding.
Well, and I'm not always a big fan of what the government does as far as how they choose to spend money and that kind of thing. But really, when this thing first came out, I thought it was a decent program because it really, I think, was trying to address one of the main issues, and that's keeping people employed. But I think where it missed the mark, and we just had a guest on that is in the restaurant industry, it kind of left some folks out. And one of them is the restaurant folks, because a key provision of that PPP program or bill is that in order to have the loan forgiven, you have to keep your employees on, right?
Right. So what I have told people when we've had conversations to determine whether the PPP program was right for them or not is you have to keep your staff at a level, and the date we think it's going to be is either February 15th or March 27th. We're not absolutely sure of the date. But as of that date, whatever full-time equivalents you had as of that date, you still have to have. Mm-hmm. You have an opportunity to rehire them back through June the 30th. However, it's still a little bit unclear about whether you would retro pay them. Now, if that's the case, in all reality, the program was designed so that you keep your employees employed and they don't enter the crazy world of unemployment.
Right, yeah.
If that's the case, then the government's paying you to retro pay them, in essence.
Yeah.
So we think, based on what we know, which the guidance is not out there specifically for that at this point, but we think that was the plan, is as of the date you get funded, you have to have your employees on payroll, and you have the next 8 weeks to get them there. And it may mean that they get one huge check the last week because that's when you were able to locate your employees or get people on the payroll.
Right. Well, and we've gotten guidance on the front end of things, which is, we've gotten guidance kind of as we've gone from the SBA on how to calculate the maximum loan amount. And so what you're saying is that as we get closer to the loan forgiveness portion of the program, then the SBA or Treasurer or whoever is going to come out with some additional guidelines and kind of answer some of those questions.
Right. So we got additional guidance on April the 14th that helped with some of that. That's when they basically said, again, 75% has to be used for payroll, qualified payroll cost. The other 25%, which we knew beforehand, could be used for utilities, rent, or mortgage interest, all of which had to be in place prior to February 15th. But what we had never calculated until recently was, all things being the same, that 75% payroll cost, you're going to have to increase your payroll slightly. And the number that we came up with, if all things are the same, which they're not, because obviously people could have gotten bonuses, year-end bonuses last year, and SUI payments are not going to be made for higher earning wage earners for the second quarter. But the number that we're looking at is 1.16% increase in your payroll in order to make the 75%.
Yeah.
So it's not just you have to retain your employees, it's that you may have to bump them up a little bit.
Yeah. And that's because like some things got added back, like the state unemployment, but also you were using a factor of 2.5 average month's payroll, and your loan forgiveness period is based on 8 weeks. Which
right.
is,
and if you look at it on days, it works. It's like 7.2% or something like that. So round it up at 75%. But we're not looking at days. We're looking at months and weeks, which don't calculate the same.
Yeah. Yeah. Okay. Small nuances there, but folks need to be aware that
right.
Of those things going in. All right. So talk a little bit about kind of how it's been to navigate the waters of applying for these things. And again, I think just looking at the program, I think the intent was to make it very easy, straightforward, hassle-free on the business side, on the business owner side, to be able to have access to these funds. Now, look, we've got friends in the banking industry, some very good banks out there, but let's be honest, the banks have not made this easy.
No. So
some of them have not anyway.
Right. So the banks are looking at it from an SBA loan perspective. And for SBA loans, there are certain requirements that have to be met and certain documentation that has to be provided in order for them to be able to get funding from SBA for those loans. In this case, Treasury and SBA both made it very clear that this was not a traditional SBA loan and that they were looking for a quick fix to get some money into the economy. Right. Because of that, it takes thinking outside the box a little bit, which unfortunately for some people, me being one of them, we've had to get to that point, sometimes kicking and screaming here at Avizo Group, but we've learned how to think outside the box a lot.
Right.
Bankers don't normally do that. They have a loan process, be it SBA or mortgage or even a vehicle loan, and they dot all their I's and cross all their T's. And in this case, it was not. That's not how they were supposed to proceed. Right.
So basically, it was. I mean, the client comes in and says, "Look, this is my average payroll for the past 12 months." Really, all they had to do was kind of. They had to make a certification, basically said tell the bank, hey, this is it.
Right.
And that's pretty much it. I mean,
provide a couple of documents.
Yeah.
I mean, what the bill said and what the guidance said was you provide 941s, 940s, W-3, and then you run the calculation. Now, we all know from doing payroll tax returns here that that's not going to give you the full picture. So we've had to educate some people that have never done payroll tax returns before. But basically, that's the documentation that you had to provide, SUI report. And then if you were self-employed, a 1099 and or a P&L or Schedule C. And the banks were asking for a lot more information than needed to be presented.
Right. And so that was one of the challenges. And let me reiterate that this is not all banks. I mean, a couple of banks that we've worked with have been very, very easy to work with. Their portals that they've developed to be able to get this information in a timely manner were very good. They were not asking for a lot of extraneous, additional information. So, but unfortunately, from my perspective, and tell me if I'm wrong, but those couple of banks, 2 or 3 banks, seem to be the exception and not the rule.
They are the exception, and I can't blame it once again on the banks. I think they're trying to do the best job they can. Yeah. It would have been nice for SBA or the Treasury or Congress even to have said, this is exactly how you're going to do this. Unfortunately for all of us, the bill was passed March 27th. We got guidance on it on April the 2nd. It opened on April the 3rd. And we've continued to get changes continuously. I mean, the last changes that we got were April the 16th. Yeah. So it's not exactly the easiest thing to maneuver So it's not entirely their fault, but I think it could have been a whole lot easier.
Yeah, agreed. Well, so if you're listening to this in real time, within a day or two or three of it being released, there's a possibility that the PPP is still available for you to be able to apply for that and to get funding. But if you're listening to this, 2 or 3 or 4 weeks down the road, chances are that ship's already sailed. And so now we need to concentrate on getting the loan forgiven. And so I know that we talked a little bit about that, but can you kind of give some folks a little idea about what they need to be doing? Do they need to keep the funds segregated? How do they need to be keeping up with these costs? What do you foresee the documentation that they will be needing to provide to the bank to get this forgiven? What are your, and again, a lot of this is just speculation at this point because we don't have any guidance, but it can be an educated guess. So what do you think?
Based on what I've read, what I think is going to happen, or what I think should happen, is you should have opened a separate bank account or immediately move the funds into a separate bank account so that they're segregated. At that point, the easiest thing to do is to multiply your loan amount by 25%. Then you know what's available to spend on something else. So you know what your rent is going to be for 2 months. Technically, that's your 8-week period. Mm-hmm. As that's paid, pay it out of your regular operating account, and then pull the funds from that segregated bank account into your operating account to reimburse you. Okay. Utilities are the same way. You're going to have 2 months of utilities that can be paid. So as those are paid, you pull that money out of your segregated bank account. Mm-hmm. Payroll's a little more difficult. So gross payroll is what's going to be pulled out of your segregated bank account. So you should have some kind of payroll summary for every payroll within that 8-week period. Mm-hmm. That can make up 75%, and it can go over. So it can make up whatever shortfall you have in that 25% category. Yeah. My suggestion is you get with somebody. If you're not comfortable making sure that you have all of those funds accounted for, you get with your accountant or some advisor, and you have them look at it at about the 6-week mark so that you can see if you're going to have it all forgiven, mm-hmm. if you're going to have some of it that needs to be paid back, or if there's something you can do, either a bonus situation or funding a retirement, a profit sharing contribution, or something to that effect that can get you to the point where 100% can be forgiven.
Gotcha. Well, and one thing I think we need to make clear, and I was a little bit unclear about this myself when this thing first started, but regardless of how much is forgiven, based on how much you spend in the 8-week period after the loan is funded, you can only use these funds for those 4 things, right? So it's not like I can say, well, I'm just going to pay the yard guy with it and it won't be forgiven. That's fine. I'll just pay it back. But that you can't do that.
No, the only other thing that you can use the funds for that is not forgiven is interest on another loan that was entered into prior to February 15th of 2020 that is not a mortgage. It will not be forgiven in that case, but you can use the funds for that.
Okay. All right. Very good. So as we start to kind of wrap up, I know that you've talked, obviously a lot of your time has been dedicated to this particular program the last 2 or 3 weeks, but you also have clients that you work with on a regular basis. So can you give us just an idea of kind of the mindset of folks out there as we're going through this? A lot of folks are having some difficulty with, revenues decreasing and just having to make hard decisions on whether to furlough employees or do I try to keep them on and take advantage of one of the other things like the 50% payroll credit for wages and that kind of thing. What have you run across as far as just people trying to navigate the waters of deciding what to do and how to get through this?
One of the main things that people have asked is, but my doors aren't open and no revenue's coming in. So in this case, the government's going to pay you to have your employees employed, which means that they don't go through the employment process. So that's been a big help for some people that either revenues had decreased or were non-existent. And they wanted to make sure that their employees were taken care of. The problem with some of them is if you've got a minimum wage employee, your employee may decide that if they've been furloughed, they're going to go on unemployment, and you may have a hard time getting them back.
Because they could be making
$875 a week. Yeah. So I think that in that sense, there was probably a misstep where Congress is concerned in that minimum wage employees, they have no real reason to come back. Not that they have a choice, because if you bring your employees back and they're not furloughed anymore, then technically they're not available for unemployment. Right. But how long is it going to take for that system to catch up?
Yeah.
The other problem is that, businesses are struggling, especially down here where we're in a hospitality industry-driven economy. Yeah. So in that sense, we've got lots of places that depend on tourists coming in. And although I would really love to see the beaches open back up May 1st, I'm not sure that that's the best for the area. But I also know that something's got to happen economy-wise for everybody to get back on track.
Yeah, no doubt. Well, and I think the moral is, and we said this before when I was talking to Dennis about when we were just kind of going over the stimulus package provisions in general, but I've heard you say a couple of times, I mean, one of the best things you can do is just talk to somebody who knows what they're doing, right? I mean,
Right.
whether it be a financial advisor, CPA, or whoever, to navigate some of these programs that are available and to try to talk through pros and cons of what you should and shouldn't do and what you're qualified for and what you're not and that kind of thing. So very good information, Tammy. I appreciate that. So before we go, just to kind of, I mean, we got to talk about something that's not so doom and gloom. Whenever we do open everything up and the president, the governor says, all right, y'all have at it, we're back to normal, what's the first thing that you're going to do? What are you looking forward to the most as far as getting back to normal life?
Sitting in a Mexican restaurant eating all you can eat chips and salsa and cheese dip.
That's a very good answer, because I was thinking the same thing the other day. My little Mexican restaurant, bless its heart. I mean, they're doing pickup orders, but it's just not the same as going in and sitting down.
We get takeout about 2 times a week.
Yeah,
but
yeah.
And I can honestly say, on a different note, that I have never worked so hard during the last 2 weeks of tax season to not get a single tax return out the door.
Yeah, and that's a good point. That is one thing that I don't think maybe the general public realizes. But all this kind of broke loose as we were gearing up for our final run of getting tax returns and that kind of thing done. And yeah, I mean, we have all worked extremely hard, extremely long hours, not on tax returns at all. And so we're finally just getting back to where we're actually doing some returns and that kind of thing now. And we're a CPA firm that's our bread and butter. So,
and although the deadline got pushed back to July 15th so that nobody really has to worry about getting that return finalized, we had people that really wanted theirs done by April 15th.
Yeah, right.
So figuring out how to work those in with everything else was a struggle. But
living the dream, Tammy. We're living the dream.
That's right.
So, all right. Well, thanks for joining us. You've got some great information.
Thank you.
We hope you enjoyed today's episode, and if you did, be sure to rate, review, and subscribe on iTunes and Spotify. It definitely helps us in the ratings, and it also makes it easier for other folks to find the podcast. As always, a big thanks to producer Carrie Wolf and editor Johnny Gwynn. Playing Above the Line is sponsored by Avizo Group. If you want to know more about who we are and what we do, you can visit our website at avizogroup.com. That's AVIZO group.com. You can also check us out on Instagram, Twitter, and Facebook. Thanks for listening.